Wow, wow, wow. Doc here from North America. Good morning, good afternoon, and good evening. What do we got going here? I see the stock market's jumping. It be jumping. It be jumping. And let's see where we at here. Let's reverse these out a little bit. Where's that mouse at? I love those Mises to pieces. All right, let's move that down. You can see since the news came out. Well, let's show you that too, right from the beginning here. Here we go. So here's the NASDAQ 100, or on Dukascopy referred to as the Tech 100. And there's the news on the employment number. And then you can see it goes from like 1370 basically to 13670 to 13745. Still playing with it there. So, and then on the S&P 500 right here, you see it's not as exciting. It went from the other is more interest rate sensitive too, and that's the reason why. Okay, there you go. Now they're popping it. That took about a little while there to get it to roll. You know, where's the number here? Right. Where's this? Right there. There it is. Right there. I guess there's the 730. Is that 730? That's 730. Okay, so they did pop it. So that's like the 4195 area, and now it's trading at the 4213 area, 12 area. So they've popped the stocks. Now let's see what they've done to the currencies. And let's move that down and move that up like so. And then let's switcheroo. Where's it at here? We will find that with the other mouse, if we can figure out, where do I put the red mouse? There it is. And let's just move that up a little bit, like so we can switch it. Like so, there we are. Bing. And there it is right there. Let's see how that looks when we go like that. There we are. And I don't know if we can move that over. We can see more Dukascopy, or J4X. How about this side? Does that do it? No, it doesn't really do it. Okay. So that's where we are, and that's the dollar index. Let's check out Swiss franc. There it is, dollar Swiss, moving down, selling dollars. That's what they're doing, selling dollars, and dollar is in a down sell. Hey, Alex, how you doing? How are you? I'm fine. All good. It's TGIF. Thank goodness it's Friday. Middle age. Now, how about that? Today we do see it, huh? My gold and silver calls. I know. I was thinking of you last night when I sent out the charts. Doing great. Going to take some profits on the gold at 1850. Let's take a look at that. Let's take a look at that. Since the dollar is heading down, what can Mr. and Mrs. Gold do? Go up normally. Normally that's what it does. So, let's see. Which mouse is that? Let's pull this out more. There we are. And we go right to there. And let's find the gold. And so that nice little pop towards the end of the day yesterday is being carried forward to here. And you've got yourself a high of 38. And, see what's going on there, huh? You're looking for 12 more American dollars. I hear you. And, well, you're welcome, less. You're welcome. Let's see what else we got going on here. We'll shoot back to the currencies. Let's see what the silver's doing, just to see what the other metal is doing. The white metal, I guess I call it. Like you know how they talk about pork, the other white meat. You can see right there, silver is popping along very happily. Yeah, right there. Heading towards that 28-ish. Isn't that nice? There's plenty of metal investors out there that would, are very happy with that. I wonder what the cryptos are doing. Let's see what. Let's zip over to the crypto universe also at the same time. Stock combo, and let's see your coffee. Let's see what your coffee ole is doing. There is your coffee ole. A little bit down this morning, isn't it? How about that? After a nice close after that last night. And let's see how the Coinbase is doing. You can see the daily is, oh wow, the syndicate bid has been broken. There's a 275 syndicate bid. They have to step up and buy it in that area. They're obligated to contract-wise. So I hope they bought puts. And then there's the intraday. You can see here it went down all day long from the 275 all the way down to the 250. Wow. Smackadoodle. What are they doing to Mr. and Mrs. Bitcoin? Let's see what the Bitcoin is doing. I saw it trying to go into the sell this morning. Bitcoin right there. Oh, now it's up again. Okay, good. Excellent. But we've got a red dot going on. What is that all about? It was in the sell there, and it's trying to get into the buy. And so sloppy everywhere with this thing. Look at it, sloppy everywhere. It just cannot get its game together. I guess, the best thing of all is, it's building a base here. It looks like the reverse head and shoulders thing going on. So that's pretty cool. Whoop, let's go the other way. When you contract that. Because I am a very, I get more questions. More people ask me questions about that. Ooh, what's that? Let's speak about algorithms. Okay. Trading with quantitative trading approaches. Okay. Can we do this on multi-charts power language, please? Let's see. Can you write a code? Sure. You can write a robot for execution. You can write a code. Sure. In the easy language. Yeah. Yeah, you can definitely do that. And it's like a code on top of a code type of thing, So it's a lot easier than it's just easier to do, I guess you can say. Let's see. So that's where we are with that one. I guess that's the answer you're looking for. Power language is relatively easy to program in, and it's not that far off from C+ and all, but it's just a little bit more easier. That's all, because it's a code on top of a code. So that's the same way too for J4X. J4X is a lot like easy language in some ways. So same situation. Kind of a cross between C+ and easy language. Does that help you any? Because you say you want to, let's speak about algorithmic trading, so with quantitative trading approaches. Yeah, so you can write a robot for that algorithmic side of it, and then and then it will talk to the quantitative indicator and execute off of that, if that's what you're looking for. It'll automatically execute off of it. Yeah, that'll work. That'll definitely work. And I might prepare. I used to have that live on Dukascopy. I used to have not on the J4X, on my screen when I was doing my webinars years ago. I used to have the algorithmic trading running live for traders to see. And so I might prepare that for Monday, and then you can see it. I'll link it up to the euro or something like that. That's what I used to have it linked to, I think, is the euro. All right, let's see, where are we at now? So we've jumped around very well here, especially on a Friday. It's party, 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 party. For some of you, it's already Saturday, so it's like, what's he talking about? Last night was tough. All right, let's jump over to the euro. I think the last I saw it was flirting with a buy signal, if I can find it. There it is. And, oh, there it is. It's up on J4X, so let's just jump right over to it there. Mr. Mouse. Right there. Yeah, look at that spike from the news. And, I mean, is it possible to code professional quantitative trading algorithms in power language? It is, but you're forced to use just a few programs. And there's so many more out there. I think that in the end result is it's better to do it in C+, solely because it opens the doorway for you to use so many more programs besides multi-chart and TradeStation. C+ may be more stable, and Python might be more stable in the end result. If you're running a fund, that would probably be the better way to go with Python. Does that help out? Now, you know what I want to do is I want to see what the numbers exactly were. Let's see what the numbers were exactly. There we go. Payroll, huge miss. Aha! Just 260. Oh my God. Out of 1 million. April payrolls, huge miss. Just 266,000 jobs added on expectations of 1 million jobs. Mr. Biden, what are you doing? China trade soars in April as global economic reopen. The burger flipping machine AI from yeah. Here's one. I saw this yesterday. There's an AI for robot that flips hamburgers. You know, at 300% better than a person doing it, and it's becoming very popular at the fast restaurants. You know, the fast food chains. Wow, what a miss! Ouch! So I guess the markets went flying up because they thought, oh my God, they're going to lower interest rates again. I don't know if they can lower any more interest rates. 47, where you been? You don't watch the CCI on J4X anymore. No, I took it off yesterday. Just, I'm just so happy with the, we got that MACD. So I figured, what's the difference? I do like CCI. I like it better than MACD, but I had to readjust it. I have to concentrate on that and fix it because it's not running against, you see it up here? Somehow or another, 47, it got parked. Let me see, where's my mouse? It got parked right here. And it was just running between these two lines instead of running with the rest of the fast and slow stochastic. I'll fix it. I'll figure a way of getting it fixed and put it back in again. All right. So there's the euro. I guess they all figured that dollar is going to go down in value solely because the interest rates are dropping. But we've been watching the interest rates rise, and the dollar was going down in value. It's so weird, Visual Forex, I faulty for a couple of months now. I can't depend on the Visual Forex, unfortunately. I hear you. Okay. Well, then you have to jump over to something else. Did you talk to Dukascopy about that? I hear you. Have they responded to you? Have you talked to them? And if so, then I guess that's the way it goes, I understand what you're talking about. It can be unstable at times on the robotic side. I hear you. But I think that's that. I get the same thing out of TradeStation too. And also out of multi-charts. It can get not as unstable. It still trades though. But yeah, I've seen the J4X just halt. And I go back and look at it 2 days later and it hasn't been running for 2 days. No, I understand that. Maybe, and sometimes I think it's more of the way I programmed it more than it is about their system. But I've stopped trying to adjust to it, and I just leave it alone at this point. But I imagine if you take the variables that I used and reprogram it a little bit differently, it might work better. Probably this is the best one right here, programming the slow and fast stochastic. That's a really good tool there. All right, and then and let's take a look at it on the Chicago Quant. Where's that right there? There's the euro there. You can see the pop up, and it had gotten into the daily buy yesterday. I guess they had a better idea, didn't they? They had a good idea about that. What was going on there? No, it's not on the fact check spreadsheet. It says 5. Huh. And looking at this, you can see right there, plot 1 is 0.00005, and plot 4 is 0.0009, which makes this a plus. They told me that it's fixed on the next release, but no update yet in the last 2 months. I hear you. I just have to wait for it. But I'm interested how you're I'm fascinated, not interested, fascinated by the fact that your diligence. That's good. So you just keep that up. Oh, the Mars helicopter is going to make a 5th flight today. It's going to go a little distance there, it sounds like. So that'll be pretty cool. I know they're going to do like 30 missions now. The original was just to do 5, and they've just reprogrammed the whole thing, and now it's going to do 30 missions, which is pretty cool. I guess they didn't want it to crash and break, so they planned on just doing 4 of them, 4 or 5 of them. That was about it. And once they realized that it easily flies in that atmosphere, they thought, okay, now let's party with that puppy. All right, let's take a look at Cable. Cable was in a cell last I saw in the morning of yesterday. I'm not morning this morning. But it was lifting up and playing. I have on the other chart. I have the little green line up in here, where it's trying to get into the buy, like that. Let's refresh this. A lot of zigging in. Oh, okay. So now it's really pushing into it. So we'll just go like that. A lot of zigging and zagging going on there. The weeklies are all holding up, so there's not much more to be said. Yeah, we'll follow along and see how you make out with that. I had the same issues. I try not to dwell on them. I just go forward. Just go forward. All right. Now let's see what they're doing to Turkish lira. That could be interesting. It's been kind of quiet the last couple of days. Let's see. Where's the mouse? There's the mouse. And on to Turkish lira right there. Ooh, bending down. How about that? It's 10 down a little bit after all these days in a buy. We'll see. But next week, this white line could be piercing up. And let's check out what it's looking like against the euro here at the end of the week. Trying to get through the plus side, that's for sure. And as you can see, plot 1 is minus 0.0002. So, just on the edge. Just on the edge. See what it looks like over in J4X. And there is the Turkish lira. Right, I just saw it. Right there. But yeah, I understand the situation with algorithmic trading overall. I've done a lot of it over the years. So, let's see who is there. I see. Oh, okay. All right. So now, wow, that's funny how that really is. Oh, that's a 15-minute chart. No wonder it looks funny. There we go. There's the daily. Oh, 15-minute chart is really rolling over, isn't it? And you can see there it's putting in the push underneath, also on a day-to-day basis on the Turkish lira there. Wow, isn't that something? 266,000 jobs. I can't. That's going to be very entertaining to hear about once the webinar's over with. I'm looking forward to that. That could be truly entertaining. And you can see here, what is that? That is the Euro Turkish lira, and it doesn't seem to care. It's holding up pretty well there. Look at that. It doesn't want to go into the sell, whereas the dollar, because of the interest rate factor, I guess, something of that nature. All right, now let's jump over to Canadian. See how the CAD is doing. I imagine everything is jumbled because of the unemployment number. Wow, 266,000. Can you imagine a 734,000 miss? That's a lot. Wow, look at that slide going on. Buy that Canadian, huh? What's the story? Now, Mr. and Mrs. MacD are holding down, and you can see the white line is definitely below the dashed line. There's no doubt about that. And then let's check it out right there. And there's the CAD. And we've been in the daily sell since up in here, and it just keeps on finding ways to make new lows. How low can you go? It's 3 days in a cell. Is that what it is? 3 days in a cell? 2 days in a cell. This is the third day. There it is right there. And it looks like we're going to have 3 weeks. We'll be 3 weeks in a cell and 2 days in a cell. Or 3 days in a cell. 3 and 3. It'll be 3 and 3 coming in on Monday. And that's cool. All right. What's next? What is next? Something else is brewing there, I'm sure. Let's see. Let's go check out. Who should we check out next? Let's do this. Right there. Let's go to where we normally go, and that is NASCAD. See what they're doing with that. So I guess oil must be lifting. I'm thinking oil's lifting. I know it was in a daily sell last night, but I'm thinking oil must be lifting today from that action. Let's see, NASCAD right there. Is this moving up? It's moving up. Okay. So we should be seeing, because the NASCAD is heading down, we should be seeing some strength in the oil market. And I guess that's the way it is going. And then from there, we will check out the crude oil itself. That's the answer to the next one. Ta-da! Crude oil. I guess it's going. You would think it's going the same way with gold, you know. All right, there. No. Oil's still moving down. How about that? Interesting. Now normally that would be at least flat, going up, and it made a higher high, but it's no, it hasn't made a higher high. It's just it was up at one point, but it has rolled over now. I wonder how much that was relative. Let's take a look at it on J4X. I wonder if it was because of the news. Let's see right there. Let's take a look at the crude and see what action we saw from that. There it is, light sweet crude. And we're going to slip it into, say, the 15-minute spot, like so. And see how that plays its nature. Let's see. Bing and bing. And there you go. And it started rolling over about, what, an hour ago? Hour and a half ago. So it's a 15-minute chart. So maybe they were anticipating the bad news. I'm not sure. But we know one thing for sure. It is heading down. It's not doing what the two pairs trades normally do. So let's see. Where's Mr. Mouse again? Right there. So that is, let's move that up a little bit. That is there at about a half hour beforehand, even earlier, because it's 12:30 when the news came out, which is right there. So it was moving down. And was it near its high for the day? Let's see. No. Last night, this morning it was. Wonder if someone knew what was going on there. You know, it has that look like it was front run, you know? I mean, they were selling it down. They try to lift it up a little bit, take some profits, and then try to get buyers in there so they can sell more. It just has that look to it, like someone knew. That is kind of a more dramatic. Well, there's a decent dramatic, but that's pretty big. That move, one move here, and that move compared to that. We'll see. I mean, you know, there's always front running going on in these markets. I'll go back to the daily on that, like so. There we go. All right, so now what we'll do is we'll drift over to the other two energies, or at least one of them. We'll take a look at natural gas. Let's see, where's it at? Right, I know we have a mouse there somewhere. There it is. Right there. There's natural gas, and that's like going nowhere. Wow, that's interesting. It's been in that sell from here, but it's doing nothing about it, and we're in the weekly buy. So that, and now let's see what let me go back to crude for a second and see what they're doing to the weekly. No, they're not even doing anything to the weekly. It's not even touching the top of the time manifold right there. So There's no real issues going on. All right, now we jump back to the currencies. We'll see what the ruble's doing. Right there. Usually, we also jump into the take a look at the the South African rand because of the metals market. We'll take a look at that too. It should be heading down nicely. So there is the ruble. Nice. Still in a daily sell from this point here. And weekly sell last week was pretty cool. We can get rid of the cute little dots now. And then we go over to the Japanese yen right underneath it, pushing into the sell, following the dollar. And you see that line, which was coming up to the zero line, has broken the time manifold now from this action and pushing down. And I think that's 2 days in a sell. Line 19, is it? Yeah, 2 days in a sell there on line 19 on this fact check spreadsheet. And then we jump over to the Mexican peso, which obviously should be going down also against the dollar. So it's gaining value. Yep, gaining value there. We've been in a sell there for 2 days since yesterday. A little front running look to a lot of it, isn't there? And then we go over to the South African rand. Dollar rand. There it is right there. Nice. Pushing down into to touch the 14. When's the last time we've seen 14 in that thing? Oh wow. There's October. Not since 2019, somewhere along the line possibly. It's been a while since it did it. Let's take a look at it on J4X. I'm going to see how far back it's gone. Quiet day today, guys, gals. No one has any particular. I'm right there with less about the algorithmic trading, but that kind of is like deep in the weeds. A lot of people go like, "Oh, I don't care." Okay, here we go. Matter of fact, let's make it a weekly too, so we can see how far back. When's the last time they challenged the 14 in the Turkish lira? And not Turkish. I'm sorry. The dollar rand. Okay, so back here they made a little dash towards it, but now we go back. Yeah, so 2019 was the last time they played with that. And that was part of that massive run up. So it's going to settle in here somewhere as long as the metals keep on doing the thing they do. We'll go back to the daily now. Okay. Now let's drift over to, let's see, we've seen that. Okay, so we've done that currency group. And if anybody wants to see any other currency, just let us know. And if not, we're just going to mosey on now to the, we've looked at the metals complex, and we've looked at the energy complex. And obviously, that's a lot of interesting action. I wonder what platinum's doing. Let's go back to the metals complex for a second. I wonder what platinum's doing. I know that Daniel was looking for 3,400 on the palladium. So let's check that out. Right there. Right. There's, I want to see what platinum's doing. Platinum is up towards its highs. Let's reload that. The spread was around 530 last I saw. Now it's what, at 18, it's like at 570 now, right? Let's put it up on J4X real quick. Real quick. Right there. Yeah, so it's at 1830, 1840. And it's just that. So 1840, 1839, 1840 again? Yeah, 1840. Minus the 1262. 1262? Yeah, 1262. So that's like 78. So it's at 78 now. So it moved up like 30 some odd dollars. Now let's check out the palladium. That's what we thought, that we were going to see this type of action. Come back down to these lows in here. It's doing its inching its way down again. And then What did I want to see? I had something in the back of my head about seeing something. Oh, let's see copper. Copper. Wow, copper's holding up. There we go. I think we wrote something about copper yesterday. Did we write something about copper yesterday? Yeah. Yeah, exactly. So the high today is 473 now. If you'd like, could you speak about quantitative trading with algorithmic and best top methods to implement them? Okay, well, again, I've come to the conclusion that AI, and Janos has an old video because he refuses to update it anymore because he says it's just frustrating to see it collapse. Not his video. His video is accurate. The fact that fundamentals don't exactly, trading fundamentals don't always go the way they used to since the age of quantitative easing. And so Janos and I are both in agreement with that. And so he did a video on that. And so your AI would literally almost have to interpret the idea of when fundamental information, like today's labor numbers come out, you honestly don't want to trade in the middle of it. You don't. You want to stay away from it for 3 or 4 minutes beforehand and 4 or 5 minutes after, because the effect of the institutions and how they shift their portfolio have no follow through. Okay? Do you see what I'm saying there? No follow through. And that's what Janos basically identified, the lack of follow through in trading fundamental data short term and even long term. The fundamentals do not have continuity. They don't have, we used to call it on the trading floor, conviction. They don't have much conviction. They just adjust their portfolio a little bit and then they walk away from it. And so there's no follow through. In the old days before quantitative easing, fundamentals could push a product for a day or 2 even sometimes. Now they push it for 2 or 3 minutes and it stops and it dies. And it's just a bunch of volatility in that short period of time and then boom, over with. So your AI to begin with, fundamentals, looking at fundamentals like economic statistics and so forth and programming that in is literally it literally is a warning, don't trade in those time periods. Let's see. I send them all. Let's see. Okay. Let's see. Okay. Yeah. So that's a part of the algorithmic side that needs to be programmed in, is to literally tell you when not to trade, not when to trade. And then the quantitative side has become stronger. It's much more accurate, much more has much more continuity and consistency. So you want to use your programming more for direction by quantitative, and you want to basically use the algorithmic side, the fundamentals and so forth, the AI side. That's the way I think of algorithmic trading to some extent, is it's the AI side of it. And so past performance, what's that warning that they always give? Past performance always is not indicative to future gains and losses or something like that. And I think that's what you want to concentrate on. How's that? Does that help out? Okay, now let's see. U.S. employment data beats down U.S. dollar. Let's click on that just to see the article. Here it comes. There it went. No, where is it? Where'd the article go? Is it going to pop up? No, that would have been an interesting article. Well, end result is we know what's happened there. Okay. So nowadays, most of the big banks and hedge funds using algorithmic trading programs for trading. Neither of professional big banks or large hedge funds does manual trading. No, it's the other way around. I think. I think that the algorithmic trading that goes on is minuscule compared. I know that the high frequency guys make no money. That's where the real look. Algorithmic trading is mainly known as a as a as a as a HFT, high frequency trading. Those guys barely make any money whatsoever. Oh, here it comes. It's coming now. And so this is the article about from Dukascopy. U.S. unemployment data beats down U.S. dollar fundamental analysis. Dukascopy Bank. And so I'm sure they have programs for their portfolio on a long-term basis. In other words, days, weeks, and months. Also, a lot of funds and institutions and so forth, when they run a portfolio, they're running a percentage. So you have a portfolio, and let's say depending on the size of the money you're running, you say let's go off on a little I was experienced on the $2 billion side. So I was working with a couple of $2 billion funds for like 3 years, and they run about 25 stocks in position. They have another 15 or so, if not more, in the wings that they're looking at to replace when one of the 25 fails or has reached its goal. And so what they try to do is they try to keep like 2.5% of everything. And so when one of the 25 goes down to 2% or 2.25% or 1 7/8, what they do is they step up and buy more as long as their parameters are met. Well, you can algorithmically program that. That's not that hard. That's a no-brainer. And vice versa. When it runs up to 3.25 or a 3, or they'll be selling calls or lightening up on the stock position. And they like to keep their equity like a VWAP. They like to keep it equal in value. So they want all 25 products, or stocks, equal in dollar value in the portfolio. And so what they do is, as their research and their fundamentals tell them that they should still buy the thing, a particular company, and the stock is going down in value, they're stepping up and buying it because they want their portfolio to all be equal. So like say you have $2 billion, you're going to have X amount, they're all going to be equal. They all start off equal, all 25 stocks in dollar terms, not stock terms, not quantity of stock, only in dollar, so it's like a VWAP. And so it's a value measurement. So then when you take a look at the algorithmic trading of that, you can program in those things, but I think the amount of continuity and consistency has been very fleeting. So I would imagine that they probably program into, okay, if certain data like inflation comes out or earnings comes out or employment numbers come out or producer prices come out or any of these statistics come out, they probably lower the participation of the algorithm. That's my guess. That's a guess from me. Because just knowing the lack of success in the high frequency side and watching how the news and the quantitative data from the quantitative easing from the central banks has limited the action. Also, there is nowhere near the amount of trading desks anymore that there used to be. So you have less input by institutions, buyer versus seller. You have less of that. So in other words, like you said, trading programs for trading, neither professional big banks. Big banks are not really trading much anymore. Large hedge funds are. And I'd imagine they're eyeballing every execution. I don't think they just they don't just turn the machine on and walk away. They're staring at it. So algorithmic trading that I'm talking about is based on all 3 factors of technical analysis, sentimental analysis, and fundamental analysis. Yes, exactly. And you got to imagine that the markets are not what they were. And when the concept came up, it's been out there for decades. And when, they had programs running execution, 30 years ago. Once quantitative easing came in, first of all, it's like a herd mentality. What happens is that you write the programs to follow the fundamentals. And then you have your own, secret strategy that you tell your customers that you're borrowing money from or, you're having investors from, that you're going to have your own little black box that tells you that when this does that, we'll follow all these parameters plus one or two other items that we're not going to tell you what it is because it's our secret sauce. It's our proprietary tool. Well, banks, I mean, seriously, do you think Deutsche Bank actually has a trading desk at this point? I mean, I'm sure whatever size trading desk it has, it's got to be only, 10 or 15% the size of what it was 10 years ago. I mean, it's, and Citibank, Santander, Bank of Scotland, HSBC, I mean, those companies barely do anything. They're just shrinking, slowly shrinking down their, what do they call them? Their swaps, trying to make their company much more manageable. If it was functional, the central banks wouldn't be stopping banks from trading, and they wouldn't be lending them billions of dollars overnight for free for so long now. They lend them money overnight for free to keep them floating. They've forced them to have reserves twice the size of what they used to be. So obviously, there's nobody out there that's going to have a program. I mean, you might have a Citadel, and even then, I remember my friend at Citadel, he ran their a division of theirs, and he was always hands-on. I mean, so they weren't exactly turning the machines on and letting them loose. They were watching the execution. Now, does that mean that all the algorithmic, machines are all screwed up? No. It means basically the markets don't have that. You would build, I guess now you build them towards the Federal Reserve. When the unemployment number came out, 266 versus 1 million, or 974,000, whatever, either one of those numbers you can choose. Do you think algorithms kicked in? I definitely believe they kicked in, and they probably bought with blind rage, because now there's a whole new guess going on. I mean, was there a variable in there that said, okay, if unemployment was 500,000 versus 1 million, they do X? Sure. And was there an algorithm there if it was at 250,000 versus 500,000? Sure. And then did it have a sliding scale? Without a doubt, I'm sure there is. But quantitative, remember, you're not dealing with personalities anymore. You're not dealing with individuals from different major banks and institutions that are buyers of the last resort. They're the major participants in the marketplace. Those days are gone. It's kind of like those little things that are on the top of a whale, as the whale swims and the plankton and all that stuff. And that's what the funds are now. They used to be whales. They're not whales anymore. They're plankton. And the central banks are the whales. So, does that make any sense to you? All right. So let's see what the Dukascopy said about the unemployment number. This could be entertaining. There's a chart. Okay, so on Friday, the release of the employment data sets caused a surge in the euro, up 71 basis points, in addition to all the decline of the dollar. Okay, the drop was attributed to the non-farm payroll change. Instead of the forecast, instead of the forecast, it was 266,000 versus the 990,000. In addition, previous month's data was revised downward by, that's even worse. And I guarantee you those algorithms are watching that at the same time. Meanwhile, and they're interpreting the whole concept right now that value, let's put it stock up there. Because I'm sure the stock market is better than when we looked at it before. It just has to be. Let's see, there's the S&P. So the S&P now is trading at, where is it at? At 07, went to 14. How about the NQs? The NQs should be really participating because the NQs are interest rate sensitive. So the high now in that is 800. Remember we were talking it was at 740 something. So it ran up to 818. And where's it trading now? 762. Yeah, so, that's what the does that make sense to you, LS? There's programs watching this. Are they moving the markets much? Nah, not really. I don't think so. I mean, we see the market up, but the markets are. Remember this too. Markets volume are down 75%. Market volume in the stock markets across the planet are down 75% since 2008. The only reason that they even get up to 50% at times is high frequency trading. It's not long term trading. It's not even daily trading. It's inside a second trading. And so, we are in a whole different era. That's why cryptocurrencies are such a legitimate product. And, all this crazy stuff about all the central banks are going to have crypto coins of their own. It's like, who the hell cares? We're running away from you because we don't trust you. We're not running away from you because we don't like your technology of printing currency. We think that you're irresponsible. I mean, look at the marketplace. 18 trillion in Europe, all as a minus, and investors are putting out not 18 billion, not 18 million, 18 trillion is parked in equities that generate no income, none, zero. Not only that, you have to pay to own it. So not I'm not talking about you buy it. I'm talking about the idea that you're paying interest to the central bank so that you can buy their bonds. You're paying interest as a fund or as an institution to the central bank when you buy their bonds. That's right. They don't give you interest. You give them interest. So, we're in a totally different era. That's why we follow everything through quantitative analysis. The fundamentals are basically a warning when not to pay attention or not get involved. It says, meanwhile, the U.S. unemployment rate was 6.1 instead of the expected 5.8. This is the way Mr. Biden is going to try to raise his taxes. And it's still not going to work, but that's okay. All right, so there we are. Whoa, what happened here? Why aren't we seeing, what's this all about? That's gold, right? What happened to our gold? Let's try silver. What's that little warning sign? What's it? There is a hidden drawing object linked to other instruments in the chart. Click here to remove them. What's that? Maybe that's it? I don't know. Let's close JForex for a second and start over again. So, that's the answer to the whole thing, really. Is that we're in a different era of finance, and it's run by the central banks and the governments and the politicians now. And until we get enough free market individuals again, like our next election, like here's another situation. Look at the Labour Party yesterday, or last night. Labour got crushed. The Tories had a wrecking ball historic victory in a midterm election. The left is dying out. If people wanted, socialism, the Soviet Union would still be there today. It's pretty obvious. And if everybody loved communism and socialism so much, the lead currency on this planet right now would be the Chinese yuan. It is not. It barely trades 2% of the marketplace. So it's all smoke and mirrors. That's what it really comes down to. That's all it is smoke and mirrors. So now let's try J4X again. There we go. And you can see I don't see anything. None of the headlines in the United States are saying a word about what happened in England yesterday. It's a wrecking ball. It's a disaster. It's something crazy. Like they had 3,500, elected Tory officials throughout the country. They have 7,000 now. 7,000. It doubled. It's a wrecking ball. And are you seeing anything besides the people living in England right now about it? I went to some of the European Union news agencies. There was no word about it at all. It was zero information. The United States, no one's talking about it. It's like, people don't want socialism. People don't want, communism. They want to be free. They want to live their lives. They want to have a happy life. And you're not going to get it from that, that's for sure. All right, now, let's see. It's trying to load. Let's see what happens here. There's the loading again. What a wrecking ball. I mean, they went from 3,500 elected officials in the Tory party, you know, around the country, lower positions and, you know, parliament, everywhere. All kinds of positions, mayors and town councils, to 7,000. 7,000, it doubled. Tell me that people are not fed up with this crazy, crazy cradle to the grave idea. You can see the stock market's starting to back off. Matter of fact, let's see if we can throw that up there. That's the algorithms. They bought it because of the interest. Let's see, let's put it on here. There it is right there. So the algorithm, let's see, where did it start off at? We'll show you where it started from the 730 number. Right there. There's the where's the 730 number? Right there. There's the 730. We're going to put a big line in there for you right there. There's the 730 number right there. Okay? And then that news drove it up. The algorithms bought it. Now look where we're at. Where's the follow through? Okay, there we go. We're straightened out. Cool. So, and let's make it so you can see that too at the same time. There we are. There you go. That's the NASDAQ 100. That's where the news came out. The algorithms took it up in a matter of minutes. You know, tried to correct. You know, sellers were smart enough to take some selling. You know, profits out of that. It ran up there, made another new high into the 818 area. And then now look at it. It's basically almost back. That line right there. Let's put a line in there too for this. Right there. Right where it started, basically. We're starting to come right back down to it like it meant nothing. No follow through. And let's take a look at the. Now this is very interest sensitive. Very interest sensitive. The high techs are, because they borrow lots of capital, so they really lean on the necessity of lower interest rates. Now let's take a look at the S&P 500 in the same time frame. Right, I'll just move it over a little bit. This even looks worse. So this is, where's the 730? Where 730 is right there. I think that's the 730. Let's see what time it is. It says there. Yep, that's the 730. 730. Let's move it over a little bit. Right there. Right. Hey, knocked it down right in the beginning. Look at that. Let's move it over even more. So when the news came out, yeah, let's grab a hold of that. When the news came out, right there, I guess that's it. Right there. The first inclination was they sold it down hard when it came to the older stocks that interest rates have less of an effect. They see it as a slowing economy. And so then let's scrunch it up a little bit. This is the S&P 500. And let's put a line in where it started off at, like right there. And you can see we're already underneath it. And it's already done it twice. It's challenged it. It's turned it into a support. It's broke it, come up above, and it's challenging it again on the downside here. So it shows you that the lack of continuity. You know, the central banks are going to, you know, what they'll do is the central banks will do what they want because they have as much money. They have almost the same amount of money as God has. So they can pretty much do what they want when they want, and they have the blessing of the socialist in government. So, you know, we're in an era where there are not exactly a lot of individuals making decisions. I mean, you see the money managers get on the TV and talk their talk and so forth, and it's okay. And I'm sure they do believe in, they have to believe in something, so they're using the old rules. But I never ever see a money manager get on there and just bang away about the fact that the trading desks are almost non-existent, and the institutions, the hedge funds themselves are not really making. The hedge funds, I think they had the worst year this year so far. I think they're, you know, they even with the record numbers, we see the hedge fund industry not exactly exploding in value. I mean, in other words, they're not making a heck of a lot of money. They're just trying to outperform as best as they can. There's no evidence that anybody's really doing anything that great. And at the same time, you have major banks and hedge funds getting money from the Federal Reserve in the United States here, particularly overnight money for free. And they're not getting like $1 million or $2 million. They're getting like $500 million or $1 billion overnight. They're allowed to play with that money overnight. Buy government bonds, make the government happy. So they hand them money for free, and they go out and they buy government bonds and collect a little interest. I mean, the central banks are holding the marketplace up, and it's going to be that way for a while until people who believe in free markets and market economies again and so forth. You saw what Trump did. Trump, we haven't seen statistics like Trump almost in our lifetime. I mean, just like 70, 80 years, we saw great success by lowering regulations, responsible government, lower taxes, more opportunity for individuals to work and to grow, and free enterprise zones. He did all that. I mean, unemployment in the African American community and the Latin American community and the women overall, just incredibly low, all-time lows for almost every one of those, except for the women. I think they were World War II. I guess they had such a female workforce that it touched it, but it didn't break it, whereas the others broke it dramatically, historic numbers. So free markets, free people in the end result. All right, traders, I want everybody to have a safe and a smart weekend. This is the voice of reality, as much as it sounds crazy. And we try to answer any questions you have. We will catch you all tomorrow, or not tomorrow, I'm sorry, on TGIM. Thank goodness it'll be Monday. We'll be looking forward to that. So, happy trails to you until we all meet again. Happy trails to you, to all our cyber trading friends. Ta-ta for now, traders.